Does renouncing citizenship change your tax residency automatically? Imagine making a big decision to give up your citizenship, but wondering if that automatically changes where you pay taxes. It's a common question, and the answer might surprise you. When you renounce your citizenship, it does not instantly change your tax residency status. These are two separate legal areas. Citizenship is about your relationship with a country, while tax residency depends on where you live and work. If you decide to give up your citizenship, you are ending your legal ties to that country. But your tax residency depends on other factors. For example, where do you physically live most of the year? Do you have economic interests there? How many days do you spend in a country during a tax year? These rules are set by tax laws, not citizenship laws. So, even after renouncing, you might still be considered a tax resident in a country if you meet its criteria. When you renounce, you still have to file US taxes for the part of the year before you gave up your citizenship. This is called a dual status tax return. You are treated as a US citizen for the time before renouncing and as a non-resident alien afterward. You will need to file a final tax return and Form 8854, which confirms your compliance with US tax laws. If you are classified as a covered expatriate, meaning you meet certain financial thresholds, you could face an exit tax. This tax applies to your worldwide assets as if you sold them the day before you renounced. You might owe this tax if your net worth is over $2 million, or if your average federal tax liability over the past 5 years is around $206,000. Once you renounce, your US tax obligations end. But your tax residency in other countries depends on their laws and where you actually live. Moving to another country and establishing residency, there is a separate process. It is not automatically linked to your US citizenship status. For Black immigrants and their families, it's important to understand these differences. Giving up citizenship can have long-lasting effects beyond taxes. It can affect your ability to enter the United States, sponsor family members, or visit in emergencies. You need to consider the permanent immigration consequences, like losing the right to return freely. Renouncing citizenship is a serious decision. It is generally irreversible unless you go through special legal procedures. Families should weigh the tax benefits against the long-term effects on their ability to stay connected with the United States. If you have never filed US tax returns and are considered an accidental American, there are programs that might help. You could qualify if your net worth is under $2 million and your total US tax liability for the last 5 years is under $25,000. These programs allow you to settle your tax issues without penalties if your failure to file was unintentional. The process involves getting citizenship in another country first, completing the necessary forms, and attending an appointment at a US embassy or consulate outside the United States. There is a fee of $2,350 for this process. After that, the US Department of State reviews your case for approval. Understanding that renouncing citizenship does not automatically change your tax residency helps you plan better. It's vital to separate these two legal statuses and consider all the implications before making such a permanent move.